I am going to go through the best savings account on the UK market currently and why the banks are stealing your wealth. So if you're a regular saver and use a savings account, you need to watch this. Hi, this is Mosh. I'm an amateur trader and investor, and anything I learn, I teach you guys. Today we're looking at savings account and we're going to go straight into it. I'm going to show you the best savings account currently on the market and what the interest rates are. So if we just go to a money comparison website, so I'm using moneysupermarket.com. Now, there's different types of savings account. I'm going to look at the fixed term. You got easy access. Easy access is where you can take money in and out of the account. Fixed is where you have to leave the money in there to get that rate for a certain term. The best rates you're going to get are the fixed term rates. So for example, as you can see here, the best 1 year fixed term savings account is 1.35% with Zopa, and you have to leave your money in there for 1 year. Now, if we put it up to 5 years, because the longer you leave your money in a savings account, the better the interest rates you're going to get. So the best 5-year savings account I can find on the market is 2.05%, and you have to leave your money in there for 5 years. Now what happens, your money is compounded. So if we go to a compound calculator, let's say we just wanted to put in £10,000 into our savings account, and the best rate we were getting was 2.05% for a 5-year term. So what that means is, after 5 years, that £10,000, you would have made £1,078 on interest by leaving your money in that savings account for 5 years. However, this is a big issue. Many years ago, I'd have thought, okay, this is decent. You're making money by doing nothing, but you're actually losing money. Because once you understand inflation and how it works and what inflation means, you'll realize this. I'm going to show you all the calculations so you're better informed. And remember, I'm not a financial advisor and this video is for entertainment purposes only. So if we start looking at inflation then, inflation is the cost of goods and services over a period of time. So currently in the UK, this is from the Bank of England, the current inflation rate is 3.1%. The Bank of England's target is around 2%. Most countries, the target inflation is 2%. So the cost of goods and services, the cost of living basically, should ideally go up 2% every year. Now, inflation is rapidly rising. The cost of goods and services are going up, especially during the pandemic era, because a lot of countries, especially the UK and America, they have just been printing money. When you print money, interest rates go down, inflation goes up. And Zimbabwe had this issue where they had hyperinflation, where like a loaf of bread was like 1 billion Zimbabwe dollars. So to understand inflation better, let's look at the last 5 years of inflation. So 3 years of normal years and 2 years during the pandemic. If I had £10,000 at the start of January 2017, in today's money, that £10,000 is worth £11,633. So what that means is the cost on goods and services have increased an average of 3.3% per year since 2017 till 2021. What that means is if I put £10,000 in a savings account and that savings account didn't offer me 3.3% per year for the last 5 years, I've actually lost money. So what can you do about this? Personally, for me, I invest in the stock market. If we look at the historical data for the last 90 plus years, this was during a world war, financial crisis of 2008, the dot-com bubble. So many things happened. These are the returns of the S&P 500, so the top 500 companies of the US, which generally represents the stock market, has returned on average of 9%. Now, if we look at the last 5 years for the S&P 500, you can see these are the returns of the dip in 2018. And if we average out the 5 years from 2017 till now, from 2017, you can see it's 19.42%. There's a dip in 2018 and 2021. That average gives us 16.58%. Remember, our savings account gave us £1,078, which was actually a loss because inflation was much higher. So if the stock market returned 16.58% for 5 years, that would have made us £12,780 with a total value of £22,780. Now, you might be saying, hold on, you didn't take inflation into account because inflation eats at your wealth. So if we minus the inflation of 3.3%, that would give us 13.3% for the S&P 500, the stock market, in other words. So we would have made £9,373 with a total amount of £19,378. And this is minusing inflation. So you can see why I invest in the stock market. The next thing you might be thinking, how do you invest in the stock market? The easiest way is to invest in an index fund. So if you go on my channel, you can see I've done plenty of videos about many different topics. And the one that you want to watch is Index Funds Explained. I'll link it up at the top as well. The easiest and the cheapest index fund to use is the Vanguard S&P 500. In the UK, the ticker symbol is VUSA. You can also start investing yourself. I use Trading212 and Freetrade because they are one of the best platforms. And if you want a free share worth up to £100, all you have to do is use my link in the description box below. Deposit £1, open up an account, and they'll give you a completely free share. Or the third way is, which I again use, is using a managed portfolio. This is where you give your money to professionals to manage and try and make a return. You do zero work, zero effort, and it takes zero time. All you're doing is providing them with the capital. So I use a company called Invest Engine, and the reason why I use them because they have a really low fee of 0.25% per year. That's how much they charge you for doing all that work. So for every £100, it works out to 25 pence. And if you look at my portfolio, you can see that I've done zero work. I invested money into them in March 2021. It's now November 2021, and you can see I'm up 10.77% by doing zero work. And the great thing is, if you want to get started with them, if you use my link in the description box below, they will give you £50 completely free if you put £100 into them, and you get that £50 welcome bonus. Just bear in mind, you have to keep the money in there for 12 months minimum, or you have to give that £50 welcome bonus back. If you want to watch my index fund video, click this link. If you want to watch my review of Invest Engine, where I talk about it in more detail, click this link.